right, just to, provide a breakdown of the euro from today, which was like, man, I mean, we all should have capitalized on this. I mean, very textbook. I think I placed too much attention on oil today, which still played out fairly well for me. But the euro and pound USD were beautiful. So right away, right, just understand that this is a higher time frame fair value gap, a monthly fair value gap, right? And this is why I always say, don't ever try to pick tops and bottoms, right? Understand, just because you have a short-term reversal in price, right? What you have to understand is that price, right, is only pushing to a premium array based on the most recent range of price, or the most recent dealing range. Okay, so here's a dealing range, high to low. Okay, and then price is only seeking an internal objectives, right? Internal PD arrays. All right, so right away what we see here is this fractal form. Right, we have our short-term high here. Sorry about that. All right. Short-term high. All right. Next thing that we have is price taking out the short-term high. Okay. Now this area here, all right, is vital because this is the true order block. Okay, that forms. Now, what I was seeing last night was the fact that we swept out weekly lows, and then price had given us a bit of a fairy swing. Okay, so now all of this is valid, right? And make note of what I'm about to say, because there's a ton of examples, and I'm going to create a separate video in reference to why we shouldn't pick tops and bottoms, and when counter trend trades become low probability, right? And counter trend trades become low probability when price has met a premium array, right, in a bearish market, or when price has met a discounted array in a bullish market. Okay, so right here we have a failure swing. Okay, and of course, as we all know, this is a signature in price that we look for to take, buy entries. Okay, so now once price reaches this premium array, right, and the premium array is this fair value gap, okay, we completely rebalance this range. And remember, to be rule based, we all should understand that whenever price rebalances a range, the high, or the initial pricing that is responsible for rebalancing that range becomes either our intermediate high or our intermediate term low, which in this case, this is that intermediate term high. Okay, so going back to just understanding fractals, right, that institutional swing high, institutional swing low, we understand that that's, this is how the markets are booked in. Okay, so now that we have short-term high, intermediate term high, which rebalance this range, we anticipate a failure swing. The reason that we anticipate a failure swing is because that failure swing is going to be that other short-term high, right? So let's go down to a lower time frame and let's see how price delivers. This is actually beautiful. All right, so here's the rebalancing of that range, right? And then we anticipate it. We would anticipate this failure swing. So this area here becomes the other short-term high. Okay. Now, what's key about this? Okay, and I know earlier I was saying that, I thought that price could trade into, which this was still correct initially. I was thinking that price could trade into this fair value gap. Okay, but what we did was trade to this volume imbalance. Okay, it's still a premium array. All right, so I was measuring this range from this high to this low. Okay, now all of that is still valid up until there's that true order block, right? When price trades through it, this becomes the breaker, which indicates a change in the state of delivery. Okay, so up here we completely rebalance this range and we get our failure swing, and this failure swing takes us all the way down to here. Okay, and then we can see if there's entries inside of this area somewhere. 10-minute chart, 5-minute, 3-minute, 2-minute. Okay, all right. So once this is rebalanced completely, right, and then all price is doing is tapping into, this is a true order block. Remember that series of up close candles, okay, here, right? So price is just trading into the fair value gap. Okay, you can see from here, right, those bodies never close beyond that fair value gap. All right, so we're mitigating this true order block. All right, we're rebalancing the range here. All right, and once price does that, we want to see how this order flow shift once it reaches that premium array. All right, so now we form another true order block. And for those of you that are new, you know, within this group, our understanding is that an order block that has nothing to do with the last up close candle before a down move. That's not what I'm focused on here. What we're focused on is a series of candles that when price trades through that series of candles, right, if there is a fair value gap within the range of that series of candles, then that series of candles becomes or is solidified as a true order block. So right here, here's that series of candles, okay? Once price, and we're not focused on the typical market structure, right? That we're far advanced in that. But once price trades through the low of this candle here, okay? So once we trade through that low, then we look up and left and we see our fair value gap. So honestly, right at 9 a.m., right, we could have been short, and I'm kind of pissed that I didn't see this. And this is why trading from a phone and being lazy is not the most optimal thing to do. It fails me every single time. All right. So anyways, what becomes important is that, you know, if you were to take these entries, of course, you would enter here. Wait, let's come back to 2-minute. So we would enter series of up close candles, and then, you know, we would enter from the fair value gap of that. Actually, no, I'm sorry, we're here. We would enter from the fair value gap of these up close candles right here. No, we are over here. Sorry guys, this is another entry that I'm going to get to. Okay, but basically, once we get this value swing, right, and, you know, we have another series of up close candles here. Bingo. Okay, so once price trades through, going back down here to this 1 hour, which this area here, typically we see this as a true order block, right? This is that failure swing, the initial failure swing, bullish failure swing. But once we reach a premium array, this counter trend signature will become pro trend targets, right? So us trying to buy again from this retrace is invalid because we've met a premium array. And there was probably 3 or 4 examples of this same scenario last week that I went over with Landon, Mosin, and also Winston, right? But anyways, we trade from this true order block here. Okay, price comes down, and when we have once we have this change in the state of delivery, okay, we have these entries up here, and right here is another true ICTOB, right? So right here this forms, okay, we have a fractal that forms, but this fractal is somewhat of equal lows. Okay, so this is destined to be run out. All right, so once we push away from here, okay, this happens right at 9 a.m. And then we push away from there. And once we trade through here, this typically would be a true ICTOB, right? And you can see price does respect this area, right? It does have some trouble running below that area. So once it does run below that area, okay, and notice the 8:30 opening price, okay, so we push above the 8:30 open, right? The better shorting opportunities are always going to happen above true day and above the 8:30 opening price, okay? Now sometimes you won't have both of them working in conjunction, right? And you'll have to recalibrate at 8:30 if things just are not aligned with true date. That's another conversation for a different topic. But nonetheless, once we trade through this breaker, right, price comes back in, and then there's 10-minute FEG. Okay, so this was a 5-minute breaker, right, and then we're trading into this 10-minute fair value gap, which is also an order block. Okay, and also it's also a failure swing. Okay, so you can see series of up close candles. All right, the bodies never negate where this series of the low of these series of up close candles. Okay. So stops would be, up here, and then ultimately you'd be targeting this area here, and then potentially down here, But the better entries were up here once we had short-term high, intermediate, and then we understood that once this range was balanced completely, we'd form another short-term high, right, to be able to go short, right? Now, I did initially see buy opportunities in this area, but due to just a lack of being in front of the desk and with wide monitors and screens, did not necessarily anticipate this initially. All right, so that was that. Now let's push to pound USD, right? Because pound USD gave a very nice scenario, and the only reason that I didn't take pound USD is because basically, as I mentioned to you guys, we would see a bearish expansion, or in this case, bullish on the euro short term once price broke this level here, which was the fairy swing, and DXY had not yet done so. So I don't like to jump ahead of the DXY, even if we're seeing a signature in price on another asset. So basically, here we have this down push, and we're taking out the low of 2001. Okay, this is should be a very large liquidity pool, and we get that fairy swing. Okay, so once we get that fairy swing, right, here's that fairy swing coming because we just swept sell side liquidity. Okay, and we understand that sell side will reprice to a premium array, and then subsequently buy side liquidity. Right, so we have our fairy swing, and once price trades through here, right, we get this displacement. All we want to do is look for a fair value gap, and this is that fair value gap. So I actually sat and watched this whole thing trade away from me. And what was key about this is that price had something to be pulled to, right? And what it had was this volume imbalance. Okay, this weekend, this opening gap, which we term a volume imbalance, right? So buys, right, would have come from here on the 15-minute, and then you'd be targeting this entire area. So when you have volume imbalances, price should always trade up and all the way back through, right, to basically fulfill that volume imbalance. So it's not like the fair value gap where it trades to it and then away. It has to trade up through and then down back through on the other side. Okay. So buying would have come from here on the pound USD, okay, and then you'd be targeting, I'll probably just target this liquidity pool here, this fair value gap for exits, and then you can see right here, right, what do we get? Series of up close candles, right? And then, once price trades through right here, here's your fair value gap. You're just looking for the fair value gap after that. And, me, honestly, I probably would enter here. But here's another series of up close candles, right? And this is just a fairy swing, okay? So that fairy swing, that, we're only looking for two patterns, guys. It's either a breaker or that fairy swing. Now, you can't just look for these. You can't just see this as a pattern, though. You have to see narrative and other things of that sort, right? So buying would be from here, shorting from here, okay? This is all the same. Nothing changes, okay? And then you can see the fractal form, short-term high, intermediate term high, and then another short-term high right here, all right? All right, so let's push to oil. And I'm also going to make a video on actually something that I forgot to mention, right? You can see, right, where's this entry coming from? Above the 830 opening price. And then where is that's true day open, okay? So let's push to oil. Okay, so I know it's kind of cloudy because me and just left a session with Vinny, but this area here, this whole orange area is a weekly, actually not the whole orange area, the whole orange area is a daily order block, I believe, 4 hour. Yeah, so this whole area is a 4 hour ICTOB, but most importantly the weekly, which is what allowed us to kind of have a short-term repricing. This was a weekly fair value gap, so actually we can condense this to here, right? And I'm going to show you why my shorting was wrong and how I actually mitigated that position. So let me get all of this out of the way. Okay. All right, so what I'm understanding is that this red line is a old low, okay, and we're sweeping sell side liquidity, and we form that fairy swing. All right, so once we form that fairy swing, what you can see here is this is also a series of down closed candles. Price trades through it, okay, and then we have a fair value gap inside. So here's a fair value gap here. I want to say my entry comes from this 2 minute, 3 minute. Okay, yeah, so basically my entry comes from, I'm trading this fair value gap here, so I'm in here and I'm targeting, right, this 30-minute array, okay, 30-minute FVG, right? And initially I thought that price I knew we would run these relatively equal highs, but I was seeing this area here as a true OB. So initially I thought that this area, which we did get a reaction, but I'll show you exactly why I was wrong on this trade, on this short, and how I fixed it. So I'm long here, right? First target is met, and even if I wasn't long right here, I could have got long here inside of this FVG, because here's a true order block. So I could have gotten long here, and just had stops up under that failure swing, and then targeted these equal highs. Okay, but nonetheless, once we run out this high here, okay, and we tap into this fair value gap, right? Where I'll go wrong is this narrative, right? Higher time frame narrative is that I'm trading from an old low and a weekly fair value gap. Okay. Once that forms, if we look at we can look at it let's look at it on the 2 hour. I'm shorting these are propulsion blocks, right? So I'm literally shorting here down into a propulsion block. All right, and so that's where I go wrong on this trade. Okay, so when I'm stopped out and I quickly see, all right, cool, this is why I'm wrong. This is why we shouldn't fear losses, especially not with what we know and what we learn within this group. Is because if you take a loss from a high, what would typically be a high probability signature, and in this case this true OB, then right away, right, price is going to reveal why you took that loss, okay, and how to fix it. And this is nothing but an optimal trade entry from a fair value gap. Okay, so we get 2 minute, 1 minute. And this is where I'm saying I could have been wrong. I realized that I was wrong after I entered. And basically, I entered because we had a fair swing, and then I saw this fair value gap. But what I didn't see was the higher time frame that I'm literally trading into a bullish propulsion block in fair swing after price is reaching into a higher time frame discounted rate. Okay, so we were due to take out some type of significant buy side liquidity pool, right? And then here's that series of down close candles. So this is where my buying comes from. We take out this sell side liquidity pool, okay? We reprice higher, and then here's an optimal trade entry, and I'm just reaching to take this out because I'm literally my only focus here was to mitigate the original loss, all right? And then we take out that buy side liquidity pool, and I'll be honest, I did not anticipate price running down here, but by this time I'm not really engaged with price too much due to time. Not much on gold. NAS 100 has some pretty clear entries. I did think we reached this fair value gap. We didn't, but on a lower time frame, let's see if we can make sense of this. So we have a buy side liquidity pool here that's taken. Right, we're in a bearish market, buy side liquidity pool is taken, and then we reference this overall range, right? We've met a premium array. So now what we do, and we also have a low resistance signature down below, okay? And if you've been watching the videos, we have not reached this. Price is reaching for this target here. We should take this out. All right, so we haven't met that yet. Okay, so we should see that level run, by the end of this week, hopefully. But anyways, you have a series of up close candles here, and you can see within that range, here's a fair value gap. So you literally trade this fair value gap here, and then we short below this level and then down to this level, right? So I hope you guys find this video valuable. Honestly, could have been a big day for us, but we just gotta, focus up, and we got a long week ahead. So if anybody has any misconceptions or misunderstandings about anything that was discussed in price, just feel free to reach out. And if you are someone that's just joined, just kind of, stay patient and understand that all of this stuff will make sense, very, very soon. All right, take care.